watching Notepad. I'm your host Ibrahim Sani. Today we shall review our conversation with Malaysia's first Robo Adviser, StashAway. Very recently, StashAway has managed to raise $12 million in their Series B round, and this brings up their total fundraising to over 20 million ringgit, or about 80 million. $20 million or about 80 million ringgit. Joining me is Wong Wai Ken, the head of StashAway Malaysia. Ken, the last time we spoke, it was more of trying to unearth what StashAway is all about.
Yep.
There are a few, I guess, follow-up questions that I want to ask you.
Sure.
You guys have had 2 rounds of complete investment cycles.
Yeah.
How has the returns been like?
Yeah, thanks Ibrahim. I think when I came here in November, we were trying to attempt a successful launch, and we were also trying to explain to the Malaysian public what a Robo Adviser was. Right?
Yeah, so you're actually doing 2 things.
Yeah.
Doing your business, also educating the market,
Absolutely.
which is completely, in Malaysia at least,
Yeah.
it's completely unaware of the whole situation.
Yeah, and we've come so far since then. It's only been 6-7 months since our launch, and we have not only garnered the support of Malaysian investors, and the profile of which are very, very interesting, we can talk about that later, but this fundraise, I think, really gives validation to our business model and validation to the fact that we are in an exciting market, right, in ASEAN, Malaysia included. So I think with 8 Roads Ventures, the venture capital arm of Fidelity International, we get a huge financial and also strategic backer to help us grow in the region. We are looking to use the funds to actually expand regionally to multiple markets in ASEAN, and also look at rolling out new financial products, right? The ASEAN investor needs to be better served.
Yeah,
right?
okay.
Yeah.
But yeah, like I asked, what is the returns like for investors in Malaysia?
Absolutely. So since November, we actually got a correction in December. As you may know, the market was down 19.9%, but we rebounded in January. It was the best start to US markets in 15 years. So proves to investors that it's really, really hard to time absolutely when the market's going to swing up. So since then, we've actually ranged returns from about 5 to 12%, depending on how conservative or aggressive your portfolio is. But we think that 6-7 months returns is not indicative of the long-term returns and the stability that a robo-advisor can bring. So,
I absolutely agree, because we're not here for the short term.
Yes.
Dow has had its worst day since October last year, so we're looking at a 10-11 month period. It's down this week actually.
Yeah.
But this also provides an opportunity for investors to come in and buy on the cheap.
Yeah.
How has the robo-advisor, I guess, mechanism worked in this kind of environment?
Yeah, so we actually start off with different ETFs, which we use to construct portfolios which are diversified and balanced. And we take the best of passive investing and active investing. So I was reviewing some stats from S&P yesterday, the index provider, and the argument for active managers, for example, in down markets is, for example, that they can pick up some stocks or bonds on the cheap. But actually the statistics prove otherwise. 60% of fund managers actually don't beat the index in down markets. So basically it's a coin toss between picking fund managers, which you're paying really high fees to begin with. So what we believe in is actually long-term investing, using a passive approach and changing your portfolio according to economic cycles. And we're seeing it bode well for investors so far.
Let's talk about your investors here in Malaysia.
Yes.
What's the number like? How many Malaysians are your customers right now?
Yeah. So since launch, only very recently, we've already got tens of thousands of customers opening up accounts. And these are people, not just Malaysians, but working in Malaysia. So we have a huge expat market and interest as well. Across Malaysia and Singapore, we actually have people from across 77 countries invested in us, so from all around the world.
77 countries?
Yeah, from all around the world, and expats working in Malaysia and Singapore. So that just proves to you that the investors are really looking for
Are these
solutions.
numbers comfortable with you guys? Was this the projected numbers that you guys are hitting, or is it below target or above target?
For Malaysia, we are actually very happy with the amount of sign-ups, the accounts open so far. But our ambitions are way more in terms of the assets under management. So we have a lot more room to grow, to get deeper share of wallet. And we're going to do that by first educating the market so people get more trust and actually invest more. Secondly, get more customers to be comfortable with the concept to then start investing. And then thirdly, to continue our financial literacy campaigns where we talk about investing basics, personal finance basics, how you save for your retirement, for example. These are very, very fundamental things that not enough people are talking about.
I want to ask about the regulators that are overlooking your business.
Yes.
And Securities Commissions have again and again tried to be open to the idea of Robo Advisors.
Yes.
Are they helpful in
Yes.
providing support for your business, one, and at the same time providing, allaying concerns that are coming from investors, people like me?
Yeah, so the SC released its digital investment framework about a year and a half ago. And then we started consulting with them and eventually we got our license. So in that process, they've been extremely progressive. They really want to aim bringing new investors into the market because we are seeing that people under 35 are not really investing on Bursa. So they want to have people invest in different platforms. So that's where we come in. So they start with an agenda and they're building towards that. So becoming the first robo-advisors is just the first step, right? Obviously, they continue to support us in various ways. They have different forums, different conferences where they actually promote us and other robo-advisors, which have been recently licensed as well. So yeah, we are seeing competition in this space, which is ultimately good for the customer.
Ken, it's an open secret that in Malaysia we have separate classes of or types of investments for, separate races.
Sure.
Is that part of the reason why we're looking at low equity investors, we're looking at low robo-advisor investors? Is that the core case? Because we're looking at government-funded, government guaranteed safe returns of high, single digits. Yeah,
high single digits. So in Malaysia, across all races, I think it's fairly well acknowledged that we hold too much cash. So about 43% of our gross financial assets across the board is invested in cash. So regardless if you're Malay, Chinese, Indian, you still need to invest, right? So, and I also go to say that now there are more choices for everyone. So for your typical Malay investor, yes, do sign up for ASB, download their latest app. I find it quite good. And I think for other investors as well, there are other options, right? So now that the robo-advisors are in the market and we're seeing unit trusts not really lowering their sales charges and their management fees, really do consider robo-advisors as part of your core portfolio. And then for everyone, there are more exciting asset classes like equity crowdfunding and P2P lending. They can give you a very different flavor to your portfolio. It doesn't always have to be your dad's portfolio, real estate, the safe stuff, right? You can go for newer alternatives.
Yeah, but in defense of the unit trust managers, while the management fees are high, the returns are also confirmed guaranteed high as well for the past few years. We're looking at 30, 40% even, some of the unit trusts. So these are the kind of, I want to highlight, right? Different type of investors have different type of flavors. Some of them are getting a little bit more, savvy in how they select the portfolio. And it's not just about the appeal or the allure of robo-advisors. I'm one of them, right? I'm more than happy to take my money and put in with you guys or with anybody that is a robo-advisor. But I'm not a millionaire, right? And my share of wallet is restrictive. And I have a certain amount of money, and that amount of money is ready for investing, and I choose, for instance, ASB. Is it, and there's a lot of people in my category, in my demography. So does that restrict your business in terms of the kind of addressable market?
Addressable market, Yeah, so I think for someone like you who has a family, has different obligations, in fact we see a digital solution as becoming even more mainstream, right?
Okay.
So first of all, you mentioned that your cash flow might be tight because you have other investments and you have other obligations like your family, your mortgage and all that. But actually that's how a robo-advisor can help, right? We actually don't have a minimum investment amount, so you can start and you can top up with any amount you wish. And because we don't have sales charges, because we are completely digital, everything gets invested, right? So on top of that, we actually have introduced new features like direct debits, so people can actually schedule recurring payments and automatically dollar cost average into the markets. People are busy. People are, young professionals especially, very, very time-starved, very, very just getting their foot in the door in terms of getting their salary up. They cannot commit to very large investments like bonds or real estate, for example. So I think Robo Advisors is perfect for that market. You asked earlier about the profile of our customers. We're actually seeing 70% of them under the age of 35.
70%?
70%. So under the age of 35.
So 2 in 3 are young people?
Yes, under the age of 35. So we are really seeing young people actually started to invest using our platform. And a big proportion of that are also first-time investors. So they're not seeing this as something complicated and exotic. They're seeing this as an easy and cheap way to diversify their funds and get invested. So on top of that, the demographics that we're seeing are white-collar professionals. Bankers are the biggest demographic. I think bankers understand how sophisticated our product is. They know how much fees the banks are charging. So actually, over 20% of our customers come from financial services and accountants. And then after that, we have people in tech because they are technology savvy and they're early adopters.
More appealing to you guys.
Yeah. So professionals, they're starting to get onto the platform. But we're also seeing it becoming more mainstream. So people who are baby boomers, they've heard from their kids, they've seen our Facebook ads. So now they're slowly responding. I think over time we'll win their confidence.
All right, let's talk more about your investors, not people like me. In the next session, we'll go for a short break. When we come back, we'll discuss about the Series B raising by StashAway. Don't go anywhere. Thanks for staying on with us. You're watching Notepad. I'm with Wong Wai Ken, the head of Malaysia StashAway. We're talking about the recent Series B fundraising that the company has done. And this investment round is led by Fidelity International. And they have had over 2 decades of experience investing in high-profile companies, including that of Alibaba. Ken, let's talk a little bit about Fidelity. Was it them courting you, or you seeking for investors and therefore landed on Fidelity?
Yeah, so Fidelity International has this venture capital arm called 8 Roads, and they're completely financial investors, meaning they're out there to presumably get a good return, right? Fidelity's business in funds and ETFs is completely run independently. So we are happy about the fact that the VC investors in 8 Roads have actually looked at our business model and says, yes, there's a path to profitability and there's a path to better valuation. So that bodes well for our business. I think having someone really savvy on board adds a very different layer to StashAway. They have insights into different markets. They have insights into new financial innovation that we can also bring to our clients. I think most of all, they come in with the financial strength to back us, to expand in the region, and also to roll out different financial products. Yeah.
We're looking at $12 million or about 49.4 million ringgit, let's say 50 million ringgit. How is the money going to be funneled? Is it just purely in Malaysia? Is it going to be spread across all the markets that StashAway is in?
Yeah. So we have core markets in Singapore and Malaysia. We want to continue investing in these markets to make sure we remain as number one in a position in these 2 markets. But we're also very interested in other countries in the region. So the things we look for, while we don't disclose which countries we are particularly interested in, we look for...
Why not? Share lah.
I think in due course. I'll come back on the show when there's a new country expansion and you'll be the first to know. But the things we look for are things like the wealth market. Is it big enough to sustain a robo advisor like us? And then secondly, whether legislation is ready, right? We have to make sure the regulators there are comfortable. Maybe there are some existing players in that country already, and then we can look at those countries.
Do you need to get, SC's approval for expansion?
We do let SC and the Monetary Authority of Singapore know when we identify the country, and then we go into that new country.
It's more of notification rather than seeking for approval.
Yeah.
Okay. And what is this money going to be used for? Because 12 million US dollars in the grand scheme of things isn't a lot.
Yeah, you're right. Actually, in international markets, 12 million probably buys us a few years.
Yeah.
But the main thing is going to go to, for example, if we go into a new country, the licensing there will be quite expensive. So just to recap, in Malaysia, the paid-up capital required here by SC is actually minimum of 2 million ringgit parked aside. And in Singapore, it's actually 500 Sing. So playing this fintech game, especially in the wealth management space, is not it's capital intensive.
It is.
So wherever we go to next in the region, we'll have those capital requirements as well. So that's the main thing it's going to go to. And then it's also going to sustain our operations in Malaysia and Singapore. Part of that is also introducing new features and also new products. As a financial technology company, fintech company, we want to invest in tech. We don't want to bulk up to 100 men strong to do back end and middle office work. We want to really focus on systems.
So this is not trying to hire more people, it's not labor intensive, but more technology intensive.
Yeah, it's ultimately how does it better serve the client, right? We don't necessarily need an army to serve the clients well. I think we have been operating fairly lean. We've been very frugal with the money that we've been raising so far, and we want to continue doing that. Yeah.
Is it okay if you share the kind of cash on hand prior to Series B? Did you deplete the entire cash already?
No, I can't share the amount, but we actually had runway till end of 2020, the mid 2020s. So we were
okay, so this
quite
is a
healthy.
comfortable, I guess, runway.
Yeah, we are very, very frugal, so we keep costs low, and this helps with the cash burn.
And any particular strategy on why you're not releasing the kind of valuation StashAway is at right now?
Yeah, it's still very early stages, and obviously it's tied to assets under management. So one day when
what is the asset under management for?
We don't disclose, but actually we think that it's a lot higher than people expect. But one day when we reach an amount which is really going to grab attention and headlines, we'll tell the world. So we're not there yet. We have a lot more work to do.
All right, we'll take a short break. When we come back, we'll discuss the larger market outlook of the situation with Robo Advisors around the world. Don't go anywhere. Thanks for staying on with us. Robo Adviser is on the menu for this evening's conversation. Joining me is Wong Wai Ken, the head for Malaysia, StashAway. Ken, let's talk a little bit about ETFs and Robo Advisors, right? And this is a serious conversation because a few weeks ago I met a fund manager and he raised an interesting point. He argues that in the eyes of a retail investor, people like me, it's kind of in our interest to invest with in ETFs, also in Robo Advisor, because as you hug the ETF, you kind of track the index, and therefore it's kind of comfortable. You're looking at 50 companies or 500 companies, whatever the index has, right? 100 companies. And you normally get, I don't know, low single digit, mid single digit, if you're lucky, high single digit kind of returns per year. But what you're doing is that you are continually providing capital to big companies. You are ignoring and actively ignoring small and mid-sized companies that may be even more profitable in terms of the returns that they get per year. The kind of sectors that they're in, perhaps they're more lucrative than the sectors that the ETFs are in. You are depriving this 95% of companies' capital in pursuit of you trying to chase for your own returns by investing in ETFs. Now this struck me as an interesting kind of argument. If you extend this timeline and if a lot more retail investors continue to invest in Robo Advisors, in ETFs, and you continue to give companies like Facebook, Google, whatever, Apple, more capital when they already are sitting on trillions of dollars of cash already, what happens to this 95%?
Right.
So don't we have to take a step back and argue, right, I have to invest and I have to make money for myself, but at the same time, am I doing good for the world?
Yeah. So I think if you look at the size of the wealth management market, right, ETFs at the moment take up 5 trillion US, whereas the whole wealth management space takes over 20 trillion. So we're nowhere near close to being the entire market, but if we take this hypothetical where ETFs and passive investing dominate wealth management, you might be in a situation that you just highlighted, right? So I think, firstly, by then there'll be a lot of ETFs that also maybe target mid-cap and small-cap providers, right? Right now we're seeing a lot of innovation in the ETF space, right? There's things that were covered that weren't covered before. Indices that were not covered before are now being covered. So we think that as we grow larger, there'll be a need for more segmentation. So there'll still be some attention to mid caps and small caps. They won't go unloved, right? I think if you expand the market, we need to cover more broad areas of the economy. But also, if let's say you assume that the whole listed space is dominated by passive investors and active investors are a very, very small part of that market already, I think you are still neglecting the unlisted space. There'll still be very real assets that investors can actually invest in, things like real estate, things like precious metals, and then more developing investment platforms like equity crowdfunding and P2P lending. So in that sense, you can still take a small part of a startup or a SME in terms of equity or credit. So these parts are even more exciting than before because we never had these platforms. And very soon, with this P2P funding for real estate in Malaysia, which is really, really innovative, we might even see investors look at investing in mortgages. So while we are far, far away from that reality.
I think last year, I interviewed the Italian ambassador to Malaysia. And one of the questions I asked him was that how is it that Italy can function when they have had changes of governments again and again, right? Many times, and prime ministers again and again. He argues that the central policy of the country still remains the same despite who becomes the prime minister or which party becomes the government. Do you think that Malaysia is in that scenario where, despite what the, uncertainty revolves around who is going to be the next prime minister, do you think that at the core of it, some of the policies will remain the same, and this includes financial sector?
The energy sector, the palm oil sector. I think Malaysia will remain an export-driven, commodities-led economy. I think we slowly need to shift towards more services to balance out the mix of our GDP. But I think that's happening. I think what you're seeing in New Malaysia, for example, is more investment in renewables. MDEC and MAGIC got new leadership. So we're seeing entrepreneurs really being supported and not neglected. And also you're seeing investment in new energy. So it will change, but it's whether it'll happen in our lifetimes or not.
Is StashAway structuring some products based in Malaysia and also Malaysian equity?
We really like the Malaysian market, but I think it's too early because if you look at the ingredients to build the portfolios in Malaysia, if you just look at ETFs, for example, they don't have enough
depth.
They don't have enough depth because they're not cheap enough, not liquid enough, and also the actual ETFs that we're seeing are a little bit more, that are being introduced, are a little bit too exotic for us, right? So these are things like inverse ETFs, smart beta ETFs, things like leverage ETFs. These are things that, while if you use it in concert with a broader diversified portfolio to hedge, for example, then sure. But if you're using it for trading and you want a directional profit from going inverse, that's not something we advocate. So we would rather see more plain vanilla ETFs in the Malaysian market with more depth. There are a couple there which are great, like the bond one and the KLCI one and the gold one. But other than that, it's a bit too, it's more thematic as opposed to following an index or an asset class. That's what we want to see.
Perhaps not appealing at all for your investors.
Yeah, it's not at a place where ETFs is in the US, which has over 1,000 ETFs, and that's why we choose from the US and foreign markets. But one day, if Malaysian markets do improve and we see quality ETFs being listed here, of course we'll consider Malaysia.
Final question: with the ringgit at its levels right now, does it add value to investing overseas, or does not?
I think overall we're at a neutral stance towards the ringgit. I think it's not likely to weaken significantly or strengthen significantly in this point. But if you look at a 10-year cycle, for example, we know that ringgit has depreciated against the US dollar, Singapore, Aussie dollar. Pound has its own concerns.
Troubles, yeah.
So we might actually strengthen
But yuan is
against
now
the
7 yuan to a dollar, so
so
that's
dollars.
interesting.
So that is interesting. So we think that having people invest overseas in a broad basket of currencies is actually in their best interest. Because if you put all your money in Malaysia, foreign items will be more expensive, foreign education will be more expensive, traveling will be expensive. So if you diversify overseas, then for investment goals that are tailored to you, we think that's probably the best approach to diversify. If you look at sophisticated investors like EPF and some GLICs out there, they have
and all that.
Yeah, absolutely. They have significant amounts of money invested overseas because they
that
recognize.
also is another separate debate because Tun Mahathir is also arguing or even questioning why is it that the EPF and QAP and the likes are taking some of their portion of money investing overseas, which personally, I mean, I disagree. You know, if there are returns, go for it, right? Because
Absolutely.
I am, a portion of my money is
Our
going
money
there.
is with EPF, yeah. So we think that it's not, obviously EPF's policy and the EPF's fund managers have a much better view, but we think for the average investor, you know, if you look at institutional investors, sophisticated investors, not all their money is in Malaysia. So I think retail investors have a thing or two to learn.
All right.
Yeah.
Cool. That was my conversation with Wong Wai Ken, the StashAway head of Malaysia. If you want to learn more about this kind of interviews, just head on to astro.com, search for Notepad. You can also visit StashAway's website and download their app as well. That's it from me. Thanks very much for watching. Goodbye. Thank you, sir.
Thanks, man.